Oh, hey there. Welcome back to Return My Capital. And happy St. Patrick's Day. I just finished up a manganata and some tacos, so I'm certainly not living up to old St. Pat there, but hopefully you're enjoying yourself, maybe wearing some green. Wanted to record this video real quick, couldn't really wait. Thought about putting it out tomorrow on Saturday, but really was kind of excited to record this one on American Express and a couple things that I thought we should really get into, some information to put out. Not that it's breaking news by any means, but caught my eye the other day, and I was pretty blown away by some of the information coming out about American Express recently, so I wanted to make a quick video on it. So I'm going to go through a few of the basics here on American Express, get into some of the recently announced dividend news and share repurchase news, and have some fun with it. So, American Express, ticker symbol AXP, down about 3% today. About even on the week, down about 10-11% over the past month. Year to date, it's actually done pretty darn well, up 6%. Let's take a look here. 52-week range. Bottom of that is about 130, currently trading 156. Top of that range, 194. You see on a 5-year chart, done exceptionally well, up 65%. 10-year, you're looking at 136%. Price to earning on it currently between 14 and 15. Dividend yield 1.5%. Minuscule short interest of about 1%. Market cap $120 billion. So obviously a substantial company. The big news I wanted to highlight was the recently announced dividend raise and the share repurchase. The share repurchase was for 120 million common shares. So that replaced an old plan for approximately 36 million shares that was authorized back in 2019. So just a massive announcement of 120 million share repurchase that they're going to be executing. In accordance with the most recent board meeting. Also, dividend raise. 15% dividend raise on this thing. So not a high yielder right now, right? 1.5%. But if you're someone who's got a little bit of a time horizon to your investment future, it's hard to beat a company that's growing that dividend at 15%, as we have seen with some of these credit card companies, your Visas, your MasterCards, American Express here. So great dividend growth companies to take a look at if you're interested in that strategy. So dividend was lifted from 52 cents a share all the way up to 60 cents a share, extra 8 cents there. Going to be paid out on May 10th. Got to be a shareholder by April 7th. So you've got about 3 weeks to get yourself some American Express shares if you want to take advantage of that next payout on May 10th. You've seen back and forth over the past few months, if you pay any attention to the credit card industry, back and forth with consumer credit card delinquencies, slightly up, slightly down, net charge-offs slightly increased, slightly decreased. I think with all the talk that's been going on over the past year and a half about an impending recession, these credit card companies have really held up pretty darn well, and highlights that the American consumer is still pretty darn strong with these credit cards. Certainly not shy about swiping those things. You want to take a look at the factors here for American Express. Grades out extremely favorably in every category with the exception of valuation. Trading rich compared to other peers, but as you'll see in this breakdown, it's for very good reason. Momentum A, profitability A plus, no surprise there. Some of these elite credit card companies truly do just print cash on the habits of the American consumer. Taking a look at the dividend, let's look at that for a second here. There we go. Taking a look at the dividend. So dividend yield again, 1.5%, annual payout of $2.40. Payout ratio 21%. So you've got a company here raising 15% dividend increase, payout ratio 21%. They've got a lot of runway to raise that dividend over the next 10, 20, 30 years, whatever your time horizon is. The past 5 years growth rate, you're slightly over 9%. So you're looking for a dividend growth company to fit into that strategy if that's something you're actively pursuing. I would personally recommend American Express. The like I said, upcoming ex-dividend date April 5th, payout May 10th, and yeah, quarterly dividend payout. Dividend grade, we've got an A plus safety, right? 21% payout ratio, room to let this dividend run. Extremely profitable company. Yield is the poor grade here. Yeah, if you're looking for current yield, trying to live off that in retirement, or if you just need a high yield play to fit the mold of your portfolio, this is not the company for you most likely. But if you're looking for a grower, I mean, A minus consistency, B minus growth. However, we did just see that growth increase here with that 15%, and safety A plus. No arguments there. Let's go ahead and work over a couple more tabs here. Factor grades, valuation again, it's trading richly, fair enough. Growth, B minus, profitability, A plus, momentum, A minus. Like I said, it has been doing pretty well. Financials, you want to talk about financials. We're talking about, again, a market cap of 119, 120 billion. Total debt on American Express coming in at 45 billion with cash on hand 33.5 billion. So nothing too concerning there, especially considering the profit margins on American Express. So very healthy balance sheet, nothing to be overly concerned about. You can take a look at the cash and equivalents increasing year over year, long-term investments year over year. Let's see, yeah, net property, plant and equipment, not a huge factor for a company like this, but total assets increasing year over year. Just could not be a healthier growth rate here. Just stable year over year, printing money. Gotta love the cash flows on a company like this. Earnings, I believe they did. Let's see here. Yes, they did miss their previous earnings call. Didn't really impact the year-to-date performance on the share price because it's hard to argue with the fundamentals behind this company. So kick over to this dividends tab here again. Consistency, great grade, yield, get it. All right, it's low. It's a dividend growth play. Dividend safety, great. Payout ratio, yeah, 21% year over year, or excuse me, 5-year growth rate, a little over 9%. You can take a look at valuation. This is the consistently poor score for American Express, coming in at an F. Yeah, it just trades richly to the sector, right? It's American Express on a non-GAAP price to earnings basis coming in at 16, sector median 9, so 82% over the sector. Look, there's a reason some of these companies trade richly. Visa and MasterCard are no different. You get what you pay for, as they say. Growth grades, revenue growth coming out great, 16% growth. Sector median is under 7. Okay, so growing significantly more than the competition. Operating cash flow growth year over year, 44%. I mean, just tremendous. Yeah, revenue growth, 16%. Just, yeah, great metrics on growth and profitability. Gross margins on American Express, almost 57% gross margins. Net income margins, 15%. Return on equity, 32%. It's just keeps checking those boxes if you have a long time horizon for American Express to continue returning capital to you through these share repurchases and dividend growth over the course of decades, truly. We look at price performance relative to the sector, relative to the S&P 500 over the 3, 6, 9 months, year, outperforming the sector. Can see how it lines up here against Capital One Financial, Discover, Synchrony Financial, Ally. Yeah, it's blowing all those guys away. Really not an apples to apples comparison for American Express, but Visa and MasterCard would really be the, in my opinion, most applicable comparisons, just from a market cap perspective and quality, certainly, perspective. So, again, Huge dividend increase, 15%. Huge announcement of a share repurchase for 120 million shares. That figure really does blow me away. Obviously, a company focused on increasing the return on capital to the shareholders, which is what my channel is all about. That's why I call it Return My Capital. So, not an investor in this company. I would love to be. Just gotta wait for the right entry point. And yeah, I think their management is going to take care of the rest for the shareholders. So, again, wanted to get this out real quick on American Express. Got kind of giddy looking at some of the information and the numbers, and just wanted to send it. I did get my first subscribers today on the channel, so that was a pretty big morale boost. So thank you to those that did subscribe. That meant a lot to me. I appreciate it. And I'm going to continue to push out content. I think my next video will be that Sunday dividend roundup where I cover announced dividend increases, cuts, suspensions, and get into the upcoming weeks, ex-dividend dates and dividend payouts, really keep you in tune with the dividend companies of your portfolio. So that's going to be a recurring video every Sunday that I'll release at 9 a.m. Eastern, week over week. So definitely would love it if you would subscribe so you don't miss that series or any of the other extra content I put out when I can. And hope you enjoyed it. Hope you have a great St. Patrick's Day and weekend. Thanks for watching. Let's make some money. Take care. Bye-bye.